On this episode, Jon Maddux sits down with CEO and co-founder of Kind Home Loans, Darius Sepehripour. Located in Los Angeles, Kind was established in 2017, and although a young company, has found sustainable growth with luxury borrowers. Listen closely as the two speak about the heart behind Kind Home Loans, finding business in unique places, how to transition from originating smaller loan amounts to jumbo loans, and much, much more.
Welcome to the $1 Million Mortgage Experience Podcast. Listen in as CEO Jon Maddux of FundLoans reveals tips, secrets, and origination ideas to fill your pipeline with $1 million opportunities.
Welcome to the show. I'm here with Darius from Kind Home Loans. Thanks for coming on, Darius.
Thanks for having us, Jon.
So tell us about Kind Home Loans. That's a cool name. It's simple. It's clean. It resonates. And I see you all over social media, and I see you focused in the jumbo arena. So tell us how you got your start with Kind.
So Kind, we launched about 2 years ago.
Okay.
And we wanted to be different, right? Everyone wants to try and be different, but we actually wanted to be different. And our mantra kind of comes from our name. Kind is obviously an acronym, as I told you earlier on. So the K is kind, or kindness, right? We want to treat all of our clients kind. We know that buying a house can be a very stressful and emotion-filled experience, and we just want to have that empathy and be there for them through the entire process.
Right.
The I is for innovation. We implement a lot of innovation, not only for our systems within the company, but also for our realtor partners to help them grow their business as well.
That's awesome.
And then the N and the D stands for nonstop determination. So when we have a client, if they're not qualified at that certain point in time, we stick with them, we show them the ropes, we show them how they can eventually become a homeowner, and we give them a roadmap.
That's awesome.
Once they are ready to buy, we're there for them to help them out.
It's so true. I mean, the regulations that have come down in the last several years on mortgages really have turned it upside down, where you think that someone could qualify so easily, and then banks say no. And that's kind of where, like, guys like you and us, we thrive, because we will be determined to help get them a loan.
Definitely.
Whether it's I know you do Fannie, Freddie, all that stuff, but you also have products that can open up and expand into places where banks just say no. And
that's one of the things that we pride ourselves in too, is we want to have that variety, because every borrower is different, right? People make money in different ways, especially if they're a business owner, right?
Yeah.
So having, partners like you guys really help us cater to those people that can afford the properties, but may not fall under the guidelines that are set by certain financial institutions.
Right. What caused you to want to do that type of loan?
Well, I was getting a lot of inquiries. I had a lot of people. I've worked with business owners. I've worked with athletes. I've worked with musicians. And I've worked with people that make income in different ways. Ways that are not very traditional. And being able to just help them out, because they are clients as well. And we're all about helping our clients. So I went out and I did a lot of research. I found a lot of lenders that were helping us with alternative doc programs, so we can go ahead and cater to these people. And it's fun, man. It's really exciting helping someone who's been told no by their bank, and they come to you trusting you, and you're able to get them into that house.
Yeah, so it's so rewarding to see that, and I love it when someone does go to a bank or go somewhere else and they get turned down, and then you're able to come and pull through and pull it off, and at a good speed, and not giving them hard money, because hard money right now, I think a lot of people still, it boggles my mind that the awareness out there is still small about these type of products, because people go, I can go hard money or I can go bank, and they don't have this in between where we kind of lie. But one thread I think that I see that's kind of common, you said athletes, you said musicians, you said entrepreneurs. One thread I think that's common with these people is they're all really focused on what they're doing to make their money, right? And they sometimes not at their own fault, but like sometimes it's just not as important to them maybe to have the highest credit score, right? That's like way back here in their mind. It's like they're focused on, I'm going to go be the best quarterback, or I'm going to be the best, I'm going to write that next hit song, or I'm going to, and they're just, that's their laser focus. And we've seen someone who has tons of money, they were late on a Bentley payment, but they could have paid it off with the cash in the bank.
Exactly.
And so then that decimates their score. And then they're like, well, I can't get a loan at a bank, and you're able to make that exception, and then they're like, wow, I'm gonna tell all my friends about you, and it's a cool space to be in. I'm so stoked that you guys are doing that. And
it gives us an opportunity to kind of have like a holistic approach to actually looking at their financial situation, which I think is important,
right?
Because they can't afford the property, they can, but they know, and they know they can as well. Exactly.
And they're like, what's going on here? Like, why is someone telling me no, I could buy this?
And that's frustrating. That really is frustrating to the client, and I've seen it deter people, and I've seen realtors lose business over it because they don't know that these programs are available as well. And that's why, I work with a lot of realtors and they send us a lot of business. I always try to educate, whether it's through social media or having one of our events at our offices. I like to educate them so they can relay the messages to their clients like, hey, there is this program. There are these programs that are available to help you buy that house that you really want.
So how do you overcome the rate objection? Because these rates aren't right. They're not like 3%. They're starting in the 4s most of the time, and they get up sometimes into the 6s. And like what I've seen is people they don't understand why they have to pay a higher rate. How do you sell that?
I don't really sell it. I let them know. Lending is very common sense in my opinion. If you really break it down, you don't have to overcomplicate it, right? When you look at a lender, right? Imagine yourself being the lender. If you're going to lend someone money, right, you need to see that they have a certain amount of income. You need to look at their debts. There's things that you need to look at, right? And if they can't show certain things, then you need to be secure, whether it's with a down payment or charging a little bit more interest. It's just, it's common sense. Now, there are lenders out there who have really high rates, and that's our job to go out there and shop and find the lowest rates. You guys have great rates yourself over at FundLoans, and it's my duty to go and shop and find the lowest alternative doc rate for them and say, hey, this is what we have. These are the options.
What you qualify for.
Exactly. That's what it comes down to.
I've seen them just like, but I've seen the rate advertised at 2% and blah blah. They say that. Yeah. And then you have to kind of like sit them down.
Look at the small print. We have to inform the clients and we have to educate them on it, and that's our job and our duty. And I honestly don't come across rate objections very very often because I do go to bat for my buyers.
That's awesome. So you get a lot of referrals. You're in Hollywood, right? Your office in Beverly Hills.
Yeah, we've got several locations. The main ones that I work from are the San Fernando Valley. We have an office in Encino, but I'm usually between Beverly Hills and Hollywood. Yes.
Nice. So the ghetto.
The ghetto, yeah.
But in reality, there's a lot of expensive homes. There's a lot of people that have a good amount of money. They're well off. What has been the craziest referral source that you've ever had? Has it been like I've seen people go into a bar, talk to a bartender. The bartender is like, hey, I got a buddy. Was there any crazy stories you can share with our listeners?
Yeah. So I was at a restaurant actually in Orange County.
Okay.
I came to visit a friend who's a real estate developer out here, and we went to this place called Javier's.
Love that place.
It's good stuff. Good Mexican food. So we were there. I was having a drink, and I met an agent next to me, and she was talking about some deal that was not doing well. She was speaking to another agent, and I just said, hey, here's my card. I heard what you're talking about. I'm a loan officer. I've helped save a lot of deals, and if you ever want me to take a look at something, I'd love to. She taps me on the shoulder. She's like, you're very cute. You look young. How long have you been doing this? She's like, but I've been doing this for 25 plus years, and I have my partners. And I said, well, you seem like you're having a problem with the deal. If you have any issues, let me know.
Yeah.
Gave her my card anyway. 6 months later, she calls me. I don't know if it was the same escrow, but she calls me and she says that this deal's been in escrow for 10 months.
Jeez. It was the same one.
I think it was. And the reason being is she was the listing agent. She was also representing the buyer. The buyers were living in the property. So they were renting the property for 3 years.
It wasn't a super rush because of that. Yeah.
Exactly. That's the only reason really people will have the patience for a 10-month escrow.
Yeah.
I said, let me take a look at it. She sent it over to me, and we ended up doing a 12-month bank statement program with 20% down. It was a $6.75 million purchase.
Nice.
And we knocked that out in 3 weeks.
So because you perked up in the restaurant and you went out of your comfort zone maybe and handed a card to someone, you just closed a $6 million loan.
Exactly. And the crazy thing is after I closed that, she gave me a $4.5 million purchase.
So good.
And then her parents' house, which was $1.4 million.
It's amazing.
So, I mean, yeah, you never know.
By just kind of getting out of your comfort zone and just talking to someone a stranger, you were able to probably make over $100,000 in commission. Like, it's crazy.
Yeah, and I talk to everyone. I mean, that's one of the main reasons we have offices in Beverly Hills. Adam and I, Adam runs our media team. We're always going down for lunch, and we see a lot of the same people. And eventually, you're like, hey, what's going on? What do you do?
Right.
That's just about talking to someone. You never know where a conversation can lead.
Yeah, and I think I can imagine just from meeting you, like, your products, what you can, what you can't do. And so that just exudes confidence in, when you're talking to someone for the first time. If you don't know your products or you don't know that you can handle these out of the box kind of scenarios, then you may just kind of fumble or stumble, or you won't even have the confidence to ask them for the deal or to tell them what you can do. So hats off to you on that, dude. That's a great story. So you guys, Kind Home Loans is like a boutique company in a sense, right? But you guys have had some real rapid success. What would you kind of attribute that success to?
I would say my business partners, Jamal and Faye, they've been in the industry a long time. I mean, they're veterans and they've got a lot of experience, not only doing FHA, conventional and VA, but they've been doing these alternative doc programs. They've been doing private money, hard money. So they've got the experience there. Although we're new, the three of us, I mean, have almost 20, 30 years worth of experience, right?
That's cool.
And I think that contributes to the success. Also, when we hire new loan officers, we put them through somewhat of a rigorous training, kind of what you were saying earlier on. We want to make sure they know their products,
right?
Because I mean, that's really what they're selling.
That's huge, yeah.
If they don't know their products, they're not really selling anything. And you have one chance at a first impression. As cliche as that sounds, in this industry, if you're telling someone you can do a certain type of loan and you blow that, like, chances are you're not going to get that business ever again.
And they'll tell people all that you suck.
That, and then the last thing I would say is honestly social media. I mean, we literally are on social media every single day. We have a media team. We're doing videos, not only to educate consumers, but to educate realtors. We talk about our day-to-day, and just being able to have that reach on social media and get out to the masses. That's helped us build this, this brand over the past, year and a half or so.
That's great. So it's always fun, obviously, to look at appraisals with brand new modern home with the nice slick kitchens and all that. Like, is there do you think there's an advantage for you guys with the way you're marketing, or like, do you have a full-time marketing department and all that stuff? Like marketing's huge, especially social media. But tell us a little bit about how you approach that marketing for the luxury side.
So I have to give a shout out to one of my close friends, James Wong. He owns a company named Maxa, MAXA.
Okay.
And they have done a ton of real estate marketing for a lot of the top producers. James created a proprietary suite specifically for Kind Home Loans. Okay. And this suite is not only available to our loan officers, it's also available to all our realtor partners. It's actually available to any real estate agents that go onto our website. They can sign up for it. It's available to everybody. It's free. It doesn't cost you any money.
With just beautiful marketing pieces.
Beautiful, modern. It really just, it's templated so you can't really mess it up if you're not good at technology.
You can misspell your own name.
But that has been huge. It's a great suite and offers everything from A to Z that a real estate agent might need if they're using it. So if they need open house flyers, if they need, just listed, just sold, if they want to do mailers, door hangers, we've got door hangers on there. They can do listing presentations, and there's a whole social media suite on there too. So people are always like, I don't know what to post on social media. There's a bunch of educational tools on there that you can post and brand with your own branding, your photo, and kind of get it up there and make it look like your own stuff. So that's been huge, definitely for helping us with our realtor partners and whatnot. And then obviously social media, we're always posting and doing videos. Adam runs our media team. So that has really helped, kind of promote these modern, really beautiful properties because it kind of fits in with one another. Yeah.
And to sell these houses, it's not easy. I mean, you can put out your listing, you can market and all that stuff, but then you got to find buyers. So having a partner, like real estate agents love it if they think for a moment you might bring them a deal, right? Like you might bring them a buyer. Of course. And so I've always preached like, hey, don't go walking into a real estate office saying, can I have your deals? Can I have your deals? That's like the worst thing you can do. They put up a shield and they're like, hey, I already have my guy or my girl and I've been doing it for years. But like, do you ever, when you go and meet new realtors, do you ever bring a client to them, or like, do you have a pre-qual buyer and then maybe try to create a new relationship by adding value or bringing a deal in?
See, the only issue with that is I've been doing this a long time.
Yeah.
And I have a ton of realtor partners.
Right.
And I just wouldn't feel right just giving one deal to one agent to get a new agent, you know? Like, I believe in loyalty and I believe in helping. Right now, we just started our consumer marketing. So we're going direct to consumer and we're getting a lot of inquiries. I'd say, you know, daily we're getting 10, 20 hits and we just started this. What I do offer is I'm always open to helping grow business with them.
Right.
If they're open to spending money on marketing, I'll meet them 50-50. We'll do some co-branding.
Right.
And we'll maximize our exposure, minimize our expenses, and we'll generate business together. Cool story that I had this one agent, we're sitting in an open house together, and we created these really cool flyers on the marketing suite. We sat down, I mean, they were beautiful. We laid them out, had a couple of different like mortgage informational flyers as well too, that kind of showed the different loan programs,
kind of payments and stuff.
Exactly breakdowns and breakdown of the programs and whatnot. And we had one of the neighbors come by, and he was looking at the marketing pieces, and he's like, man, he's like, this stuff is really, really nice. He's like, you guys know what you're doing. He ended up getting that neighbor's listing eventually because of those marketing materials.
That's awesome.
So there's, I always say, if an agent's open to going out and getting business, I'm all ears.
Yeah.
That's what it's about. We're really the realtor. We're partners with them. The realtors are our partners. So we're open to doing marketing with them, doing events with them, whatever they need. We're open to it. So
that's cool.
That's how I like to help them really generate business.
Nice. Well, I mean, if you don't do it, someone else is going to do it, right? Some other LO. So what about your new loan officers? Do you believe in teams? And because I think a lot of brokers out there kind of are they're like Han Solo, they're their own dude, right? Like they're not out there with a big team. But what benefits do you see are there for having a team in your?
I've worked by myself. And I've worked with a team in the past, and I will work with the team for the rest of my life.
That's good.
Delegation is huge. Much respect to those that do go Han Solo, that do go, by themselves and try to do everything from start to finish. I just think that you're limiting yourself at that point in time. If you're doing, if you want to get to 5 to 10 loans, doing it by yourself, that's possible, right? But if you want to get to the next level and do 20 loans or 30 loans or 40 loans or 50 loans a month, you got to build, you got to grow, you got to delegate, and then just kind of assign. For example, what I do is I have 10 people on my team, right?
Wow,
so each one of us have our own job, but I'm not going to make our borrower speak to 10 different people.
Yeah.
Do you understand?
Yeah, that's bad customer service.
Yeah, I'm the guy they speak to. I get the updates, but in order to do a large quantity of loans, I feel like if you're not delegating, you're not getting to your maximum capacity of what you can really do.
Right. You mentioned earlier like the Henry Ford model, so you just kind of set it up as a kind of in a more boutique way, not like this factory, right? Like you have a conveyor, not a conveyor belt, but you have like people that really know what they're doing, taking care of those particular jobs that they have.
Yeah, and they're good at it. They focus on one thing, so they know what they have to do. It works. It really does.
That's cool. What mistakes do you see other LOs out there? I mean, maybe they're not even on your radar, but what would you say like is something to kind of avoid any kind of mistakes or any kind of things that people are doing out there that are being long-winded on things, or what stuff people should stay away from?
The two biggest issues I see are LOs who are not really learning the new programs, new guidelines, and relaying the wrong information to realtors. Yeah. Because I'm sure you've met realtors where they're like, oh, but this loan officer told me it's done this way. And you're like, no, that's not how it works, Yeah. So it's just lack of information and self-education and learning the new guidelines and programs. And then the other one is just overwhelming yourself. Again, it kind of leads back to the past question. If you're busy and you're not on top of all your files and you're trying to grow at the same time, I mean, you're running around in circles and you don't know really what you're doing, So I think just, those two things are just, not understanding all the different programs out there, the guidelines, and then just kind of, not being able to really be on top of everything.
Right. That's good advice. So you said earlier, I think offline, that you did a lot of FHAs and govies and different loans.
Yeah.
lot of our viewers want to find jumbo loans. They want to do jumbo loans. They want to get into jumbo loans because, we were talking earlier, like you could do 20 or 10, you can do 10 $200,000 loans or 2 million.
Yeah.
We're all paid on BIPs. So it's like, might as well focus on trying to find those. They're sometimes hard to find, especially if you don't live in a place like Beverly Hills or Hollywood. What was like, and I know you said like deals started coming across your desk, but was there something you did to sort of like attract that? Because I know there's like a law of attraction, right?
Yeah.
So is there anything that you did to kind of get yourself out of doing the government loans and more into the jumbo space?
I do everything equally still to this day. And just being in California, one of the things is a lot of the properties out here are high balance or jumbo loans, right? And I would just work hard and prove myself, and just meeting new realtors and people referring me to other realtors. I got my first jumbo loan, when I was like a couple months into the industry, and it's just really getting yourself out there, whether it's through marketing, social media, or going out to networking events. I do a ton of networking as well.
Yeah.
Everywhere that I go, even if I'm going out for fun, I'm networking.
Yeah.
Right.
That's cool.
I go to car shows. I'm a big car guy.
Nice.
I like to go to the car shows and network,
Yeah.
And just
because you never know who you're going to meet, right?
Exactly. So I think just, this cliche quote that I hear, but I love, is your network is your net worth. Right.
That's cool.
So if you're networking and you're hanging around people that are doing well, and you have a way to help them, eventually once you've built that rapport with them and you can kind of talk about real estate or mortgage or whatever it may be.
Right.
That's what it leads into, surrounding yourself with the right people and being in the right environment.
It's amazing what one referral partner could do to your economics.
It changes.
Yeah.
Game changer. Yeah.
Just one. And then you say, well, what if I multiply that and get 2 or 3 or 4,
And it doesn't matter where you live, to be honest, right? Like I was living in the San Fernando Valley, which is about an hour and 45 minutes north of Beverly Hills and the Los Angeles area. And I would still go out there and I'd still go to restaurants. I'd still talk to people, you just have to have that confidence. I think the main thing leads to is if you know your product and you're willing to work hard and you can confidently go up to someone and say that you can help them. If you're going up to a realtor, you see these realtors that are selling these like $3 million, $5 million, $10 million homes. You can go up to them and say, hey, I've got this product you should check out.
Yeah.
One deal and you do it right with the right lender. That's your foot in the door.
They put themselves out there because they're marketing. Yeah. They're spending a ton of dollars on marketing. So like we had a magazine the other day that came in and I opened it up and it was all nice listings and literally they put their phone number, their email, their address, and then now with, you could sort of cyber stalk someone and find out, okay, they like the Dolphins or whatever, they like different teams or they, and then, not like a crazy person, but you could at least know you have a starting point. It's easier today than it's ever been to meet people and to get into networks
and right? Jamal, my business partner, says the same thing. He's like, get to know your client before you approach them.
Right.
I went to the University of California, Berkeley, and I work with a lot of agents that went to Berkeley.
Yeah.
We have that in common. So it's finding commonalities is a great way to, kind of get your foot in the door and speak to someone and then say, hey, this is what I'm about. This is what I can do. I would love to try and work with you.
That's cool. So it sounds like, you've had a ton of success and congrats on the success.
I appreciate that. Thanks,
man. What I like to ask all my guests, what would you say is your favorite failure?
My favorite failure is...
Because there's always going to be somewhere along the way you've had to have some kind of failure.
Yeah.
And it's not, a lot of people think like that's a negative, like I don't want to ever share like my failures. But a lot of times failures turn into something amazing, right?
They do. So prior to the crash in 2008, I started in this industry in 2003. Okay. And I was 18 years old. The industry was way different back then.
Yeah, anyone could get a loan.
Anyone can get a loan. And, I started doing business and I thought I knew everything, but in reality, I knew nothing. Because the guidelines were so loose, you didn't need income documentation, just sign here.
You got approved? Amazing.
100% financing, right? Just being 18, 19, 20, 21, 22, up to 23, and when the market crashed, making more money than, doctors, lawyers, and, it gave me an ego. And I was a kid and I thought I knew everything. And when the market crashed, obviously I was spending my money on everything, cars, going out on trips and all that. And I wasn't saving for a rainy day because I'd never been there. My father always said, save your money, you're going to regret it. And obviously Dad never knows what he's talking about now.
Yeah, right.
Market crashed and it was a reality check. I remember, at that point in time, I was like, I got to educate myself and I need to learn because I'm vulnerable.
Yeah.
I don't know what I thought I knew. So I remember I had my Range Rover still at the time, but barely enough money in my account to fill up the tank. Drove to Santa Monica College, started school. I wanted to learn. So I did my 2 years at Santa Monica College, made sure I got good grades. I was playing football at the time as well. And then did well enough to where I got accepted to a lot of great universities. I ended up going to Berkeley, as I said. And when I was there, I studied economics and I had an emphasis in consumer behavior. I graduated with honors and I wrote my honors thesis on the crash of the market.
Wow.
Right. So my personal experience, the crash of the market, and not only the impact it had on the domestic economy, but the global economy through the secondary money market.
Interesting. So you gave yourself a really great education on something that would just bolster your overall knowledge for your career.
Exactly.
That's
exactly.
cool.
And just knowing, just the personal experiences, the formal education, all that kind of contributed to me, understanding not only how to grow my own business, but how to manage my finances, and how to grow at a scalable rate and how to understand and, really understand the mortgage process from start to finish, because it's a long drawn out process even after someone funds and closes on their deal.
So true. Yeah. So repeat business, do you get a lot of repeat business?
I do. A lot of repeat business, refinances, referrals. But I'd say half of my business is referral based. You do a good job. One thing that I do is I always make sure I get the best interest rates for my clients. I really, really shop and I really, really, look hard to find them the best rate. Once you do that, you save them as much money as possible. They trust you, right?
Yeah.
Because there are other lenders out there who are going to sell a higher rate to try and make a little bit more money. I don't operate like that. I don't let anyone on my team operate like that.
Yeah.
I make sure that we really, really go to bat again for our buyers and make sure we get them the best rate, because making a little bit less on a loan goes a long way.
What do you typically charge? What's your comp plan?
It's interesting, right? So obviously with the government loans, we get paid by the banks, right? So we make sure we get the lowest interest rate, and we don't charge the client any origination fee. We don't have any administration fees or junk fees. We really eliminate all those to save the clients a lot of money.
That's good.
And that's on every file, right? Whether it's a $200,000, home or a $20 million home, it really doesn't make a difference, right? As far as alternative doc and the other programs where it's borrower paid and the borrower has to pay, on average between 1 to 2 points, just depending on the loan amount and the difficulty of the loan, the time it's going to take, but never anything more than that. Even on my hard money, I try to keep it close to as 1 point, as much as possible.
I've seen people. Recently, we had a deal where I think it was a $5 million loan, and the broker was trying to charge, I think, over 2 points on it. Yeah. And the borrower was just like, I'm not signing this. And I was like, gosh, really? You could have charged 1 or 1.5 or 1.25, and you could have then not even worried about that, and then instead of the borrower just didn't sign the docs and balked at everything. Sometimes you just, for me, I never wanted that stress to worry that someone else was going to do the deal for cheaper. I valued my expertise and my knowledge, so I would charge for it. I never would go under 1%, but it was always 1 to 1.5, right?
1 to 2 is what I do. I think that's fair. I think it really is fair for what we do and getting the deal closed.
Especially if they're big loan amounts.
Yeah. But, at the end of the day, we're there to help the client, and, we let them know up front what the costs are going to be. But if you're charging over 2 points, people are smart.
There's guys out there that are going to charge less and you might lose the deal, right?
Yeah. I mean, people have Google now.
Right.
They can literally go onto Google and look things up and see what's fair, what's not fair. So, I think that 1 to 2 is solid, That's
good.
Keeps everyone kind of happy.
So do you use a CRM, or do you use it? How do you keep in touch with your past clients?
I use Salesforce. Okay. Yeah. I learned Salesforce a long time ago, and I've just used it. It's been easy for me. There's so many CRMs out there. I just think it's important that you have a CRM.
Yeah, and you use it. Yeah, because you can have one and just never use it, and But
Salesforce is easy. It's easy to learn. But there's free CRMs out there. You don't have to pay for. As long as you're using it and you teach yourself it. I mean, I think that's the most important thing, because we had a lot of business from that too, through our drip campaigns. When the rates drop, we send mass email to all our past borrowers. Hey, rates drop. See if you're eligible for a refinance.
That's good. Yeah.
So that brings you a lot of business. The other day the rates dropped, right?
We did. Yeah.
And we sent emails out, and I got 7 refis in the matter of 2 days. I mean,
yeah. If you don't tell people, they're never going to call you, right? You gotta put the word out there and keep it going.
Someone else will tell them.
Yeah,
they will,
and they will call them.
They will.
It's crazy with the technology, what people are doing now. Like to it's competitive. It's super competitive. So that's where you got to really put the time in with your borrower. You got to, it's nothing good comes easy. You have to actually do the work. You got to be out there doing it. So where do you see the economics? I know you said you wrote your thesis on, like, right now, are you watching the market? Do you see like any kind of, what would be your prediction for like the future here, like the next year? No one has a crystal ball.
Yeah,
I'm not gonna hold you to
I
it.
hate making predictions,
But do you have a feeling? Because when you surf, I don't know if you surf, but I don't surf, but I've surfed, right?
I have to. I'm not good though.
but you feel the wave coming. You feel, and when there's no waves, like when so we have our finger on the pulse of the mortgage business, right? And on the interest rates and the economy. It's what we do. It's what we're paid to do. What is your feeling, would you say, like going into the election year, and like, the rates have dropped, the housing inventory is sort of limited in some ways. And like, what do you feel like? Do you think there's a crash imminent? Or do you think it's like, we're kind of safe, we're in this place? Like, what are your thoughts?
I think people like to use the word crash so freely sometimes. Like, what really is a crash?
Yeah.
Do the prices coming down 10%? Does that mean it's a crash? I mean, really, what's a crash? In my opinion, the rates are amazing right now. They're amazing. I don't think that they're going to be where they are right now for much longer. Maybe by the end of the year that you could see an increase. The Fed said, I don't think they're going to be raising them much, till the end of the year. If you do see an increase, in the rates, obviously we always see a little bit of a decrease in the values. California it's very hard to afford a home in California in certain areas, right? And we run into that a lot of times being in Hollywood and Beverly Hills. Young couple comes, they want to buy a house. I think that maybe there will be some sort of a correction as far as prices go. They might dip down a little bit, but again, no crystal ball. I really don't know. I don't think the rates will stay where they are. And I think that's huge. People don't understand the difference between a 3.25% rate and a 4.25% rate, and how much money you're going to be paying extra if you keep your loan for 30 years. If you end up paying off that loan for 30 years, you can save yourself a lot of money. I definitely encourage people to look at a mortgage calculator and see the differences in what even a 0.5% to 1%.
Scary when you look at that.
It is, but it's the reality. You just gotta,
you're like, oh my god, that's how much interest they get.
Yeah, you gotta nip it in the butt, and you have to just educate yourself. That's just what it is. It's better than paying rent, and
it's way better.
I've got friends paying $5,000-$6,000 a month for their apartments in LA. That's $60,000 a year over the course of 10 years. That's over $500,000 that's just gone.
It's insane how much leverage and appreciation can change someone's life. Like I think I've talked about this before on the podcast, but like, if you go back and you look at historical, where people were redlined out of, buying homes and things like that, and how that really affects generations of wealth. And so it's very true that if someone buys a home, just for inflation reasons, for multiple reasons, right, they're gonna have to pay something, whether it's rent or a mortgage. It makes such a huge difference when someone buys a house. And I think that's why I think in good faith, the presidents of the United States wanted, homeowners to be wanted home ownership, because it helps the whole country with wealth. And, it obviously backfired with giving everybody a loan, right? Like, but before the crash. But if you can help a borrower and a young couple, like you mentioned, buy a house, it's life changing.
Let me tell you a quick story.
Yeah.
My best friend, Kyle Caplinger, lives in San Diego. I've known him since we were 5. Okay. And we've been best friends since. I helped him get into his house. He moved to San Diego after high school with his fiance. His fiance is a teacher out there, and he's been working at In-N-Out since he was 16. Worked his way up the ladder, became a manager. Right? Yeah, that's so amazing. So he worked his way up the ladder, and they bought their first house. I don't know. This was like 2013, I believe. Right? Bought their first house 2013. It was like $350,000, if I'm not mistaken, in San Diego. Fast forward to about a year ago, he just had his second child. Or I'm sorry, this is when he had his first 2 years ago. Sorry, this is when he had his first child 2 years ago. In-N-Out laid him off while he was on maternity leave.
Jeez.
Okay, and he's got a mortgage. He's got this baby on the way.
Yep.
And it was really, really, really tough for him. And in the midst of trying to find another job and scrambling around, we saw that his house went up in value from 325 or 350, whatever he bought it to, is now worth probably close to $600,000 in the area that he bought, right? So it almost doubled.
Yeah.
From 2013 to 2017 or whenever it was. Ended up getting another job. He just recently sold his house. Walked away with about 300 and change in after he sold the house, put that into a new house, and he just bought an $850,000 house. Beautiful home, but his loan amount, because he had that plus his savings, 401k, and what his wife had, their loan amount is still $350,000. Maybe they're paying a little bit more because property taxes, obviously, but it's not substantially more, and they have this beautiful home, brand new home in San Diego. Equity. But he wouldn't be able to put himself in that position if he hadn't bought a house.
Right.
Right.
Well, let's think about that. He had $300,000 in appreciation. How hard is it to save that much money? That's a lot.
It's hard. It's hard.
For someone that works at In-N-Out Burger, like, you can't save $300,000 in 4 years.
It's like having another solid income.
Yeah.
Like your house is like another person that's contributing over time. Like you got to play the long game, right? Short game is great. You can flip houses and make money here and there. But in the long game, you'll typically always win.
Yeah. Well, if you look at a chart we talk about this a lot in the podcast, but like a 50-year chart, 100-year chart, it's like a 5-year-old could say, yeah, it started here and now it's this. Like, I mean, you talk to older people and they're like, I bought my house for $20,000 back in, the 60s or
back
whatever
when a Coke was 1 penny.
So, I mean, that tells you right there, like, if you're not doing that, your money is, and we talked about like people who put their money into the mattress, there's a lot of people that do that and they put it in like shoe boxes or whatever. Like, their money is losing money when they do that. It's crazy.
It's a graveyard.
Yeah.
Mattress money is a graveyard.
It is. Okay. Well, anything else you want to leave? Anything that you can share with our viewers or listeners that could help their business?
Yeah, I just have the confidence. And I think the way you get confidence is by learning your craft. Yeah. Right? Just like any basketball player, football player, athlete, musician, anyone, they practice. It takes years.
10,000 hours.
10,000 hours, yeah. Yeah. That rule is definitely, we've acquired a lot more than 10,000 hours, but that's what's contributed to my success. Right. And using social media as a platform, having a voice, even if you don't have a media team, I'm sure you have an iPhone that you can put on a little
anyone can grab their phone now and just go on and then do it. Yeah.
And step outside your comfort zone. Whether you get a no from an agent who sells $200,000 houses or a no from an agent who sells like $10 million houses, right, they're both no's. If you get a yes on either one, it's a win. So don't limit yourself to your area. I do deals from San Diego all the way to San Francisco. I've taken flights to meet my clients in San Francisco and sit down and go over their different options with them. Wow. Okay. So don't limit yourself.
Be willing to do what the other one won't be willing to.
Yeah. Do what it takes and outwork the loan officer that's next to you. This business is very lucrative. It can be very lucrative. A lot of people get into the real estate sales side of things. It's glamorized by $1 million listing. People want to sell these beautiful homes. Yeah. I mean, which is great. It's a great industry. But the mortgage side of things, like if you stick to it and you just have the confidence, you educate yourself, and you see what top producers are doing and kind of duplicate that, and use our advice or tips or whatever we may offer you. Try it out. If it works, great. If not, try something else out. But just being dedicated, determined, and motivated consistently, even when you get a no, just move forward, roll with the punches. You'll do well in this industry, But again, it just comes back, in my personal opinions, to educating yourself. So when you do come across someone and you have that perfect opportunity in time, you just give it to them and show them what you're talking about and deliver on your word. Integrity is huge. So
that's awesome. Anything you do to help motivate yourself? Is there any tricks? Like, do you drink a certain drink? Do you do a lot of push-ups? Like, how do you get motivated?
I honestly, I didn't come from a lot of money, right? And I've been broke. Every morning I wake up and I just remember the feeling of not having money. And that motivates me, not knowing how I'm going to pay for my gas to get to work, not knowing how I'm going to be able to go and buy my lunch, not knowing where my next dollar is going to come from. Right. So just waking up money, even if I'm doing well, even if I have 20 escrows, I wake up, I'm like, okay, I have 20 escrows, but what happens when those close? Yeah. So
that's good.
Yeah.
Thanks for coming on.
Thanks so much for having me, John. I really appreciate you guys.
Awesome. And like, share, and subscribe, guys, and we'll see you on the next episode. Thank you for listening to our podcast. If you guys are looking for more content like this, we have a FundLoans YouTube channel where we give away more tips, secrets, and origination ideas. You can also email us at info@fundloans.com. And if you've made it this far, I think it's safe to say you like our content. So please subscribe, share, and send us your scenarios. Let's fund loans together.